Welcome everybody to this impact talk, Geneva Macro Labs impact talk on doing well by doing good when investment generates return and impact. Actually, I should say not only when, but how. And I think that's exactly what we want to talk about today. We have again two excellent speakers here with us in this webinar. I'm Eckhard Ernst. I'm your host tonight. Together with Renate, I will guide you through this webinar. Just before we start, maybe some housekeeping rules. So you already see this little red dot, which indicates to you that we are recording this webinar. If you don't want to be seen on screen, you can turn off your camera. We will publish this webinar later on our YouTube channel, so you have the chance to revisit and review what we discussed tonight, and obviously share this with with your community as well. I would also kindly ask you to mute yourself now and then you're not speaking, as we want to make sure that we all experience have the best experience of this webinar. Just to give a quick background, I mean, most of you already know Geneva Macro Labs, but for those who join us for the first time, it might be interesting to get to know us a bit better. We are Think and Do Tank based in Geneva, and we really kind of try to combine research with a multi-stakeholder platform to make an impact. I mean, this is exactly what we are trying to achieve as well tonight. And our mission is really to leverage the institutional, financial, and human capital that we have in Geneva and beyond. And I mean, beyond really meaning globally. We are pleased to have a global community now that is increasingly engaging with us through this type of impact talks and through other means as well. We're trying to bring together leading minds, just as tonight, from the public and the private sector, and want to really make sure that we not only have these talks, but really develop solutions together with our community and publish them and promote these ideas in a wider policy and in impact investment sphere. The impact talks is really a new concept that we developed over the last few weeks on the basis of our already very successful webinars that we launched last year. And the forum that supports our aim of bringing together these thought leaders from different sectors on top of a new project that we launched last September, which are the impact labs, where we're trying to pilot new impact processes and projects. So if you want to learn more about this, obviously feel free to reach out to us. We will share with you some means in the chat box, and obviously later at the end of the webinar as well. And we're always really keen in engaging with whoever wants to share ideas and new insights with all of us. So having said that, let's get started. As I said, we have two excellent speakers tonight. First is Tenke Zoltani, who is the founder of Better Finance. She, after being a director at Impact Investing, she was at UBS, where she built out the bank's impact advisory practice for UHNW individuals, ultra high net worth individuals. And then before joining UBS, Tenke was an investment manager at Eastern Asset Management in Switzerland. Our second speaker is Svetlana Banerjee, who is a TV presenter, founder and managing director of Impact Investment School and Impact Community, Come On Me, co-founder and president of Galileo International Impact Investing Center, and board member of the Swiss Impact Investment Association. And as I said, I will be moderating this together with Renate Günther, who is our vice president from the Geneva Macro Labs. So the way we do this impact talks is we split it up in 3 different sections, where we want to kind of engage with our speakers first, and then want to engage with you. So you will basically have immediately after some opening questions to our speakers, you will have the chance to engage with them directly. So let me start with our first question, which is, as I said, the topic is when doing well by doing good. We wanted to obviously understand a bit better the alternative investments that there are to make an impact. So my first question is actually to Svetlana. And if you can give us a bit of like your 5-minute overview of what is impact investment and how it is different from sustainable investment. If you can give us some of your insights there, would be great.
Absolutely. I can talk about even definition for quite a long time, but I will try to put it in a 5 minutes so everyone is on the same page and we have the same background on impact investing. So the global definition by Global Impact Investing Network is impact investments are investments into companies which generate positive, measurable social and environmental return beside financial return, right? So you basically invest into companies which are social enterprises, and we usually say that they must be financially self-sustainable, right? So it's not charity or philanthropy. Those companies are financially self-sustainable. They create and measure impact. This is important, that impact is measured. The other feature is that usually those companies are innovative and disruptive. In order to create both financial return and positive impact in the world, usually it takes some efforts and technologies, innovation in order to make it possible, right? So they are very innovative, they change lives, they change systems. And the last but not least, those companies are scalable. So it's not just a small project somewhere in a village, but usually their businesses can be replicated in some countries or cities at least. And so we can create more positive impact. If you look at capital spectrum, and I mean by that, like from charity, philanthropy, then we go to responsible investing, sustainable investing. On the other hand, we have traditional investment. So in between sustainable and traditional investment, we have impact investment. So, and there are a lot of various definitions out there, and people are sometimes mixing up sustainable with responsible or with impact investing. But it's very important to understand what is what in order to take the right action. So let me give you maybe a bit more of example. Sustainable nowadays are usually investments which are applying ESG practice, right? Environmental, social, and governance criteria. But what happens that a lot of blue chips or big corporations which are published on stock exchange, that they are all called, or many of them called sustainable. Apple, Microsoft, because they look for CO2 emissions or they reduce waste, they apply gender equality. But the problem is, at the core of their business, it is not mission, but it's still profit generating activities, right? So the big step from sustainable to impact investing, it is this difference that impact investments have an underlying mission, which is actually nowadays very often related to sustainable development goals. For those who hear it for the first time, it happens. Sustainable Development Goals 17, they are the goals defined by United Nations in 2015, which we must, or it would be great if we could, achieve till 2030. Among those, such as accessible education, no hunger, action for climate, sustainable cities, responsible consumption, and so on. So all these topics are basically a frame or themes of impact investing, and impact investing funds are usually putting these colorful pictures, the ones who know what I'm talking about, for investors, having it easier to recognize and to align their values with investment. If we look at the numbers, and this is very important to understand again what is what, sustainable versus impact. Global sustainable investing assets nowadays account around 30.7 trillion US dollars, okay? And however, among these 30 trillions, almost 20 are just negative screening, meaning that we just exclude certain industries like tobacco, alcohol, weapon, pornography, out of our investment scope, and we call it sustainable investing, which I think is completely not okay, because if we do that, nothing will change. We will never achieve SDGs. We will never really make a change for our environment and solving social challenges. So the idea is to shift more capital direction impact investing. And this is what we do by providing accessible education, by raising awareness, what is what. Interesting fact is also about Switzerland. So Switzerland has similar pictures. There is much more assets which are in ESG, sustainable investing, and only nowadays it's actually 50.4 billions in impact investing, which make 6.2% from global impact investing market, which is 800 billions. So global is 800, Switzerland is 50.4 out of that, which is not bad, but I'm sure Switzerland could do so much better. But amazing to see that the growth of impact investing is tremendous. In Switzerland, compared to last year, impact investing grew by 209%, and it's continued growing. So if you're not yet into this sector, I think it's not a moral choice anymore. It's just a smart choice to be on impact investing and be among either investors or responsible in the sustainable business, which create positive impact wherever you are. Now it's really a smart choice to consider and incorporate impact in your business strategy or investment strategy. If you look at market players, only lazy are not there right now. So banks, we have in there, we have governance, foundations, private investors, we have various networks, consulting firms, insurances, and so on. Pension funds are also, even though they are restricted, but they are also looking at impact investing, and some of them can actually implement impact investing in their portfolios. So it's enormous opportunity for everyone, I would say, and maybe like to make it really crystal clear what is sustainable, what is impact, or how do we distinguish that? We say that sustainable investing creates broad impact, right? So we need big corporations as they are huge, so they can create huge impact even by implementing these policies on ESG practices, but the impact is broad, right? Compared to impact investing, they go into depth, so they create deep impact, transforming lives, transforming systems, and Tenke will give you some practical examples in that. So I think 5 minutes is over.
Yes.
Eckhart, is it? Okay,
Absolutely.
I was on time. Yeah, okay.
No, thanks.
Good.
Thanks. I mean, it's a great overview, and it's, as you said, it's a great transition to Tenke, because now we want to actually dive a bit deeper into one particular area, which is on natural capital, and why investors should actually be concerned or be interested in that particular type of impact investment. So Tenke, over to you.
Sure. Thanks, Eckhart. So natural capital, I would say, really is a niche strategy, even with an impact investment. So we can talk about many more mainstream things like education and health that were already mentioned, but I'm going to focus a little bit on natural capital, and then happy to get into even more details during the Q&A. So just looking from a financial perspective, and then we'll get into the impact as to why natural capital makes sense. Well, we can view this sector as one that offers competitive economic and financial returns alongside traditional investment opportunities. So we really do have a very wide universe of monetizable opportunities that can generate comparable economic returns. So we're looking today at a world that is beridden by climate change, by biodiversity loss, zoonotic diseases, of course, the pandemic linked to first to pangolins, now to bats, even civet cats. If we look at where these diseases are coming from and what they're causing and what kind of effect it's going to have on your traditional portfolio, a very good hedge is to invest, in fact, in natural capital, which will not just protect you on the downside, but also have the broader, I would say, more important impact of helping to prevent some of these very difficult and grievous challenges that we're facing today. There's also the positive aspect of the triple dividend. So One, you can invest to avoid physical damage from natural hazards. I'm thinking of investments in coral reefs, for example, which can protect coastal communities from the strong effects of typhoons or hurricanes. Two, you can avoid output loss due to this damage. So again, if you are an infrastructure facility on the coast and there's a very strong risk of hurricanes, well, a very intact coral reef can help protect you from the damage. And third, you have co-benefits, whether it's water regulation or food security. Of course, you have this in situations like mangroves that are helping to filter water. Likewise, food security, again, in the mangrove example, you have a very healthy ecosystem for fish, for shrimp, for other types of aquatic life. To date, I would say natural capital has really been overlooked by the public and the private financial communities. So now you have a few players coming into the fore that are trying to direct investments into this, but largely it's been a very big investable domain of investments that are generating these positive benefits, financial and environmental, that have been ignored. So if you're viewing this from a risk and return perspective, it makes sense. From a diversification perspective, it makes sense. And then certainly resilience vis-a-vis the natural world. I would also just mention that a figure that has been quoted quite a bit is this 44 trillion of economic value that's being generated, which is over half of the world's GDP. It's moderately or highly dependent on the natural world. At the same time, if we look at ecosystem services and the losses that have been generated because of the failure of ecosystem services to date, we have significant number of industries that are heavily impacted by this. So the largest are food, beverages, the health sector, and consumer goods. So these are the sectors that have been traditionally mentioned as being very high risk from biodiversity loss and from other types of natural capital losses. So of course, human activity is linked really regardless of what you're doing to the natural world. So I mean, this is less than 5 minutes, but I would summarize to say that we have a very strong financial case for investing in natural capital, and then impact, which we'll talk about in just a few minutes.
Great, thank you, Tenke. And I mean, I can see questions are already coming in. So Renata, over to you to handle the Q&A. Thank you.
Thank you very much, Svetlana and Tenke. I want to give the floor now to our participants, and I have two questions that I want to package. One is from Jürgen Bartel, and the other one is from Gabor Farkas. Could you please unmute yourself and ask your questions, please? Starting with Jürgen and then followed by Gabor.
I responded to you. It was more than a comment than a question. I had just been in a discussion on crisis and pandemic and stuff, and we talked about sustainable developments and investments, and it was on family office level. And the funny part is that there's a lot of whitewashing, greenwashing in the market, and very little really looking into the real impact these things have on a corporate level. And you mentioned Amazon, whereas Amazon is promoting themselves as a sustainable company, which they are not. And on a corporate level, all their sustainable efforts are actually a drop of water on a hot stone, as we say. So is it more needed, if I should ask a question, is it more needed to have a look at the real impact and less a look at the implied impact that is being promoted?
Mm-hmm. Thanks for your question. And this is very important, you know, and it's as long as impact measurement is not a mandatory thing, right? So everyone measures impact the way they want it. And you can always show positive side of your activities if you want to. It's a little bit like accounting, right? The accountants are very creative to show the numbers which would make investors happy. Or so if you don't know how to dig deeper, you will be confused. Well, the same thing happening here. What I know, there are some foundations, and I actually met them a few days back. What they are doing, they are reading the reports, and if someone says, okay, we are we have strong gender equality in our corporate policy, then they look, okay, what does it actually mean? Right. So behind the words, there are also numbers and real actions and activities. And if nobody controls that, you just can write whatever you want. There is no law how you should write your impact report. And it actually happens not only in sustainable investing, but also in impact investing. And so you need to be critical when you also read impact reports. As in impact investing, usually when I take impact report, they're all beautiful and everything is so positive, right? Like we have pink glasses and everything is just great. So what I do, I dig deeper or read what is not there. So usually they don't write things which they don't want to show. So you need to ask questions if you are looking from perspective of investor and to really understand what is the impact which is created or which they say they create, right? But
so that, yeah. Just to mention this, saying this and listening to you again is how much of the impact investment percentage you were talking about before is truly impact investment, and how much is implied impact investment but not the real thing.
Yeah,
so we're starting to get into that direction. There's more questioning that I hear in fire chats like that or other places where investors do ask, okay, what is the real impact you're doing? How do you measure it? How do you do on each of the SDGs, and not only on the one like gender equality? Sorry, I'm in aviation. Aviation is a horrible thing about gender equality in the cockpit. Less than 20% on the best of airlines. Not talking on a global level, just talking about a single airline with 20% of pilots being female. Why is that? Why can it not be more? Why do they call themselves sustainable, and why do they promote SDG 5 as being their prime thing when they only have 20%?
I hear you, Jürgen, and you know, I'm an ex-banker. I worked at a bank where at our bank, in top management positions, there were only 10% of women. So I know exactly what you're talking about. And I think the situation is the following. There are some kind of attempts to standardize it, to regulate impact measurement, like impact project management. They are trying to make the measurement obligatory and a standard. So it's measured by certain standards like accounting, right? It will take, I don't know how many years, 5-10 years more, that it would become really a standard. And then we can have some kind of standard framework that it's not just greenwashing, but it's truly properly done. Yeah. On the other hand, you were asking how much of impact investing is true, how much is not true. You need also to put it in a perspective that impact investing itself can be very different, you know, because there are some impact first investors and finance first investors. What does it mean? Finance first investors, they want to have market return, but then they will have a little bit less impact or not that deep impact. Okay. On the other hand, we have impact first investors which want to have true deep impact, as I was mentioning, but less return. So it's closer to philanthropy. It's not philanthropy, it is an investment, but it's close to philanthropy. So dependingly what is what, also on which project you're looking at, it can be very different. And I mean, it's very subjective sometimes. What do you call impact? Is it already enough to be true impact, or it's not enough, right? But if you look at I like this example because it's kind of controversial a little bit. It's sanitation, and one company is sustainable and another one is impact. And when I give these two examples, then it's really, there is no discussion. Then it's really true what is impact, what is sustainable. And let's give this example to you. So it's a company, Geberit, Swiss one, right? It's sustainable company. They produce toilets. They are sustainable in their practices. Fine. Okay. So they call themselves sustainable.
Yeah.
Example,
thank you, Svetlana.
Yeah. No, Renata, just a second. It's very important, the other company. I promise I almost done with it.
Oh, sorry. I thought you were.
No. This is sustainable. But the impact company called Synergy, they operate in Africa, in Kenya, in Uganda. And they provide toilets to communities which don't have any. So imagine you wake up at night and you need to go to the toilet and you have none at home. What do? Especially if you are a woman, you go on the street, and this is how also violence happen. It's not hygienic, so there are a lot of disease, and it's really an issue, right? So it's a basic issue which is not fulfilled. So this company brings the sanitation to rural areas. They teach them how to wash hands. They provide these clean toilets. Amazing thing, they collect the waste and transform it to fertilizers. So it's like a whole chain, you know, and they teach people, they franchise the toilets being entrepreneurs. So they can run this one toilet, then they scale it up to 2, 3, 10, and they increase their income. So this is the impact company with high impact, and Geberit is a sustainable company. So this is how the range, how big the range can be, right? And you just need to dig a little bit deeper to understand. And the common sense always shows, okay, what is impact, what is sustainability? All right, I'm done.
Thank you, Svetlana. And now last question for Tenke. Gabor, please go ahead.
So thank you. For a long time, farmers were reluctant to invest into malaria research because they could not generate enough income with the medicine it would produce. So how do you measure the impact investment if you take into account I'm trying to think of the question how do you reconcile impact investing with SDGs and capitalism as it is understood today with extreme liberalism?
I will take a point of view slightly different from Svetlana's and keep it very brief because I think this is very subjective. I think it's really up to the individual investor and the market to some extent to send the signals as to how they determine and want to price impact. So we had the Amazon example earlier. In fact, when Amazon, after its quarterly earnings sometime during COVID, announced that they would reinvest their proceeds into protecting workers better, the share price took a hit. So in fact, you would expect all these wonderful do good impact people to say, oh yes, let's boost the share price, let's buy more Amazon, and people dump the stock. Whereas earlier that the share price had taken a hit again because they weren't doing enough for COVID. So I think this is really, in my personal opinion, a personal reconciliation. I think there are facilities that are set up now, especially to tackle the issue that you're talking about. So if you look at the Global Alliance for Vaccines and Immunizations, so Gavi, Global Fund and others, they're trying to enable market access, provide procurement practices that encourage the production of generics or pharmaceuticals to actually be produced at a fair price and cost that will be disseminated to poorer countries. I'll talk about the COVID response and how that's affecting the market in a little bit, but I think it's a very deep issue that you've touched on. Yeah, and I really do think it is investor and market led.
Thank you, Tenke. So over to you again.
Yeah, thank you to this exciting discussion. I mean, you can see that we got already heated up here in a bit, and so it's great to have all this good question. I mean, maybe Gabor, to your question specifically, I would add that one of the motivations that we coming here together at Geneva Microlabs is really also to kind of identify maybe what are missing markets, and where do we actually need to create, maybe find new partners to develop new markets in order to strengthen incentives and create opportunities for profitable impact investment. I think that's a bit maybe the spirit in which we are coming together, and what some of our previous impact talks have also tried to achieve. Let us go to the next.
May I throw something out there? One of the things that should be explored more is PPP, public-private partnership, because when there are political decisions to take for long-term investment, sometimes politicians are reluctant because they might impact their chances on being re-elected. So this PPP might offer a support where the entire burden is not on the state, but there is a shared burden with public and private funds.
No, absolutely. But as you might recall from my initial remarks, I mean, we really try to foster a multi-stakeholder platform. And for me, that includes exactly what you're saying, a public-private partnership. But let us go to the second question block, which is really what are the challenges and opportunities in impact investment? I mean, we have talked quite a bit already, but maybe we have a bit of a chance to discuss a bit further some of the issues. And maybe I would actually like to start turning it around and start with Tenke first and trying to discuss maybe like what are green stimulus points, timely opportunities for impact investment and return. So I mean, how do you actually time these type of impact investments so that it actually provides the best return, both in terms of impact and in terms of economic returns or financial returns?
Sure. So there has been a really robust discussion, I think, on green fiscal stimulus. I mean, this also encompasses blue fiscal stimulus and SDG linked to building back better and all of this stuff. So in fact, in the discussions that I'm seeing right now, so it's a lot on how debt is restructured in a way that supports meeting SDG outcomes or meeting development targets or indeed nature-based targets. The conversations are moving. It's really on a country by country level. I think the policy recommendations that have been issued are showing that the policies that are nature focused, or let's call it like nature-based solutions, they will have positive impacts on jobs and incomes, on accelerating decarbonization, on protecting nature, and on improving climate resilience. So the argument is that in the process of building back better, on putting more money into infrastructure, onto supporting robust jobs for communities, et cetera, that then it will have a positive effect also on creating stimulus that creates even more jobs, on produces even more activity on the domestic market than would have rebounded anyway. So I think there are some very positive movements in this direction. But Eckhard, you're a labor economist, so you could probably talk more about this than I can.
Yeah, no, maybe on the labor side certainly, but not on the investment side. I guess that's where your expertise comes in. Maybe Svetlana, for you then a follow-up question. I mean, so what are the broader challenges of opportunities that you see, and why is it so important to engage in the sector to overcome social and environmental challenges? And maybe, I mean, I would actually like to also hear you a bit on the social challenges. And we talked a lot about gender diversity, and I think that there are some broader issues that maybe you can focus on in your response as well.
Mm-hmm. Let's start with opportunities, positive, right? So as I told you guys, so the market is around $800 billion. It's still a niche, right? But it's growing very quickly. And around the globe, there are already 1,720 organizations, at least, which are into impact investing. I had the pleasure to interview head of climate of European Investment Bank at our TV show. And they say that they allocate 1 trillion euro into climate change investments. So it's tremendous opportunity for all businesses, investment, which are into impact investing, right? So we have resources available if you are in the sector. So these are all the advantages for you. We have national government help as well. So even if you're looking for grant or donation, it's also possible to receive. And very important to mention that reputational risk is almost zero if you are in impact investing. Of course, if you are doing it right and not greenwashing, and there is a lot of goodwill, right? So the market is growing, resources are available. You just need to be proper impact investing project in order to help solving SDGs. And why it is so important, right? So why do we even need this impact investing? Because as you know, we have charities, philanthropies, but they didn't make our world substantially better, healthier in the last centuries, right? So the government, charities, philanthropy alone are not equipped to solve all these problems which we are facing and represented by Sustainable Development Goals. This is why we need private capital to be involved and to enable the shift. And I mean, I don't know if everyone knows, right? We need $2.5 trillion annually till 2030 in order to solve SDGs. This number I'm not sure if it's that accurate, right? But it is a number, okay? If you look at global wealth, it is around 220 trillions out there. And impact investing represents less than 1%, 0.36% of these global assets. So if we only shift the money 1 to 1.1% annually to impact investing, we could solve SDGs, theoretically, right? So the numbers are fine, but we need to act, right? So what is on the way to overcome this challenge? The challenge is, first of all, that many still don't know that impact investing exists, or if they know, they don't take the action. They are not properly educated. And it doesn't matter if it's financial institution, if it's a corporate. We have around 25,000 banks on the globe, which are managing 150 trillion US dollars. Okay, it's enormous amount of money, but this money is not yet flowing properly into impact investing. So we need to educate bankers, clients. We need to create accessible impact investing funds. We need to unite the whole ecosystem, because even though there are so many thousands of organizations out there, they are not yet collaborating in a way that we would all get together and think, okay, let's kind of make it the new normal, right? So the whole idea is to make impact investing the new normal in the financial sector, and that it would help to overcome the challenges. But also regulation is not very helpful. In Switzerland, it is FINMA, and FINMA is pointing to the government is pointing to FINMA, who is making the step, right? Who is going to create enabling policies for impact investing to become the new normal, that the banks would be motivated to invest more into impact investing, that pension funds would be allowed to invest into impact investing, or that we could do something like UK did. So UK government said, okay, guys, you have a lot of dormant accounts, right? Dormant accounts when people don't claim their assets at the bank, and they are billions of assets. And UK said, okay, let's put certain amount of your dormant account into impact investing fund. And like that, they gathered, I think, around 900 billions into impact investing. Oh, sorry, millions, not billions, 900 millions, yeah. Exactly. And Switzerland could do something like that very easily. Mm-hmm. There are many dormant accounts out there, right? So the actions need to be done on various levels, on education level, on government level, at regulation level, inside of financial institution, and it's then we could shift it and make a bigger change. I think, and I stop here.
Thanks. Thank you. Yeah, and now we already have, again, quite a number of questions piling up. So Renate, over to you.
Thank you. Dipiotti, please, would you like to ask a question? You had something for Tenke?
Yeah, thanks a lot. And thanks for the great discussion. What I wanted to ask is, it's very difficult to change the whole aspect that investors have about making profit, and maybe a good way to deal with this is to shift the profit with a bit of carbon credit, which they can also trade for. Do you see any trend in this way where investors are using carbon credit to compensate a bit of the profit they would have expected?
I used to work in the carbon market, so there is a new robust conversation taking place in the voluntary market. And yes, there are select examples of what you're talking about. We had in the chat some questions about Bayer, and in fact, this is something that they're investing into as well, to see if they can compensate some of their farmers for regenerative agriculture, for sustainable agriculture practices through carbon credits. But I have not been following the discussion very closely on the voluntary side, so perhaps somebody else on the call has better feedback than I do. But indeed, this is one of the revenue streams to come out of natural capital that's worth exploring in greater detail.
Thank you, Tenke. Susan, would you like to ask a question? You had something for Svetlana.
I think she answered part of it, but yeah, I'm not an expert in this area, so I might ask questions that are off. But I really, precisely, I was seeking for concrete examples, because she mentioned that you can have companies invest which are not exactly like philanthropies, but yeah, they have impact. And actually my first question was impact for who? How do we measure the impact? Who is benefiting, if I may use a layman's language? And secondly, I had asked if there are really examples of companies which act, they are closely related or they are close to philanthropies, but they are not exactly that. They're investing for public interest, if I may use the terminology that speaks to me, or for the society, societal benefit.
Yes, thanks for your question, Susan. So of course, they are such projects and many of examples, even in different SDGs. Right now, I have one in my head in renewable energy.
Sorry.
Yeah. Oh, now we see. Okay, great.
Sorry,
So,
I didn't know.
So the company is called MCOPA, and what they do is they provide solar power systems which replace kerosene lamps for a population which is living on less than $2 per day, right? So it's really for low-income population. And how do they even do that, right? How can this population pay the solar system which are built on modern technologies? As I was mentioning earlier, it is possible with mobile payments. So they pay like every day or every week a little amount, and after a year or 1.5 years, they already pay back this to the company, and they have this solar power system at home. The kids can study in the evening. It's much more healthier than kerosene lamps, right? They connected more than 800 homes in Africa, in Kenya and Uganda by this way. And this is one of the examples. And who are the stakeholders? Okay, it's people who are lacking access to basic needs like electricity. Okay. So here, a private company can solve such needs, and a lot of times also government is involved. So maybe we're supporting at the early stage the impact investment project. When they start, usually they also use grants or donations, and then when they go for the first financial round, then investors come in. But at the beginning, usually it's also funded by government or by foundations, and then slowly they can approach impact investors. I hope it answers your questions.
Yeah, with a smile, because you mentioned Uganda. I'm from Uganda.
Oh,
wonderful.
Do you know this company, MCOPA?
No, unfortunately, I live in Switzerland.
Unfortunately, or very fortunate.
Wow, thank you. Now I'm handing back to Eckhart for the last question.
Thank you, Renata, and thanks for this engaging conversation. So I think we're a bit running behind, but I still want to go to our third thematic block, which is basically how can we make impact investment a new normal, and how can we combine impact with return? I mean, in a sense, this was all about it, but I think that somehow, the post-COVID new normal world, how does impact investment becomes basically a part of our normal type of investment vehicles. Maybe Tenke, over to you. How can we combine impact with return, and what's the opportunity here?
Sure. So I will run through a number of examples and then leave it open to the chat in terms of who wants to hear more about what. So I put together just a really quick talking points in terms of where are the opportunities today. So everything from wildlife tourism, there's very interesting private equity investments. This involves everything from private lodges and game reserves to other ecotourism opportunities. The returns tend to be double digit. I'm speaking in very broad terms, so not about any one specific opportunity. We have a number of new funds from the banks, in fact. So Lombard Odier has announced a new natural capital strategy in November 2020. So again, a Swiss-based bank that is targeting small enterprises around circular economy, bioeconomy, consumption, zero waste. So with a natural capital focus, but other themes as well. They're proposing market rate returns. If we look more specifically on the direct side, so again, these are quite niche, but depending on where you are looking, they can be accessible. So directly into marine protected areas. So for some of the small island developing states recovering from COVID, they are opening up opportunities that you can actually invest directly into some of these marine parks, these opportunities for not just forests, but for the public as well to go to help protect and the oceans recover. And these are offering returns anywhere from 5 to 15% generally. Of course, they carry not a small amount of risk. Then on the more conventional side, in terms of what we're seeing in the news today, there's a lot of discussion on nature performance bonds. So these tend to be issued by governments. They're tying the cost of their debt repayments to quantified targets in biodiversity and emissions reduction targets as well. So I think it's quite interesting, again, at the sovereign level, so less accessible to people like us. And then finally, an investment I've worked on for the past several years is the Rhino impact investment. So the first ever species-based conservation bond, which is linked to actually increasing the number of rhinoceros in South Africa and in Kenya. And this is linked to the coupon that is paid. So the entity managing it is incentivized to really help increase the number of rhinoceros. And the higher the number, it's obviously modeled out better than I'm explaining, but it's tied to the return. So there's quite a few opportunities out there, both on the fund and the direct side.
That sounds very exciting. We actually have a similar project on elephants, so we need to talk about this. So,
for sure.
Svetlana, what are some practical examples of how we can make impact investment in the new normal?
I mean, there are really a lot of things to do, guys, and I'm very action-oriented. And I usually say, I mean, you can do it on 3 levels, starting with yourself on a personal level, and just check, okay, what do I actually do as a consumer? What to buy, if to buy at all? If you are buying some impact investing projects produced products, it's already better than the normal ones, for example, so you can check that out. Then for whom are you working? Are you working for a company which is still just for profit only? It's your choice for whom are you working. So you can also make impact in this way by, okay, it takes courage, of course, but you can leave, you can engage for someone else who generates positive impact. Then, of course, investment, even if you don't have billions or millions, you can check where is your pension fund or savings invested. And in Switzerland, especially, you can ask, okay, is it in, or can I switch to sustainable investment or impact investing? If you say impact investing, most probably they will say, what? So they most probably didn't hear about that. But sustainable investing, most probably they will have at least something to offer you. Right, so you can check these 3 levels. On the other hand, as we already discussed, I think education is very important. So we need to educate also young people at the universities. What is impact investing? When I was studying myself at the University of Zurich, banking and finance, hardcore, nobody talked about that, right? I've learned it after I finished my university. So this is why I was so thrilled to teach today at the University of Neuchâtel. So students can already know about this during these studies. And it doesn't matter if it's finance or not. I think if you want to achieve SDGs, you must educate them that SDGs are out there, and you guys, when you leave the university, the world is not just as great as it was teach 5 years ago. You know, you cannot teach just traditional banking and finance stuff and then they go out and oops, right? So the world has changed. So practically on the education side, we can incorporate that. Then, of course, on government level, I believe that Switzerland could become the sustainable impact investing hub. As a country, we have all the resources available. We have all the technology available. we have the money available. So what is stopping us? Only ourselves, right? And if here are some people from financial institutions, so I talk directly to you, I look into your eyes. If you didn't yet educate your employees on impact investing, please do, because the clients nowadays are much more aware of that than the bankers. So for these reasons, it's just give you another reason to educate your own clients and to incorporate impact and sustainable policies in what you do. If you are a sustainable bank, then also act accordingly. Last but not least, I would say that finance should become sustainable, or it will cease to exist. You know, I think people are very innovative. They will find ways how to get finance without banks. So finance it's enormous force, and we should use this force for the benefit of everyone on the planet. Yeah.
Good one,
Thank
good
you.
one.
I mean, I take you up, Svetlana, on one of the points that you mentioned, is saying you can make an can make a difference by joining a company or an association that makes a difference. So please, I mean, you know, you're welcome to join Geneva Macro Labs for that matter. I give it over to Renate again for the last Q&A round.
Thank you,
and
Eckhard.
we need to close, unfortunately. Thank you.
Yeah, I give over to Patrick. You have a question for Svetlana.
Yeah, hi. Thanks, Tenke and Svetlana. It's a very interesting subject. From what it sounds like, you're suggesting that there's a lack of an overarching regulatory body, or like the big global regulators aren't collaborating on this. I just want to know how you felt about that, and also how do you feel TCFD and TNFD have helped with the process so far?
Can you explain TCN? And
so I can answer that one really quickly and then turn it over to Svetlana. So I think TNFD it's the Task Force for Nature-Based Financial Disclosures.
Okay.
The point is to show that nature has a material effect on investments. I think this will really come to the fore probably in the next 2 years, because we saw how long it took for climate change to be embedded in like the principles for responsible investing. Now all the asset managers have to report on these issues, but it took, I mean, really 3-4 years. So I really do believe we're heading in the same direction on nature, but I think it's going to be a little bit of time.
Okay, thank you.
Thanks, thank you for your support here. How I feel, you know, and I think it's not only me who is feeling like that, because there are many impact investing engaged people for many years. But what I see that we are over-reporting, we are over-regulating, we are over-comfortable by not acting, we are over-talking, definitely, everyone is talking a lot, we are overthinking about profit, is there a trade-off, whatever, but unfortunately we are not overacting, yeah? So I encourage really everyone also in financial industry and not that we should act with impact, as we used to say. And I mean, we just lost this luxury by not investing if the project is a bit too risky. What is risky, right? During COVID, many European great family offices, I will not name now, but who were investing traditionally, lost a lot of money in March 2020 by investing in blue chips. Impact investments located in emerging market countries, they were doing great, right? So the risk perception is also shifting here, and COVID showed that impact investing is creating not only strong impact, but also returns. So if someone is still thinking about this trade-off, I would say you are just, you need to see what is out there. There are amazing opportunities, and we should stop thinking only about profit as well. It's about consciousness shift here, I think, in order to, Tenke is smiling. It's about consciousness shift, right? Profit, what are you going to do with your profit if you're locked down in your apartment and you cannot go to see your parents, you cannot in another country? What are you going to do? it showed that basic needs are so much important than profit. The COVID showed us a little virus. And if some people still don't realize that they are mortal, I'm a yoga teacher as well. So sorry, guys, a little bit of philosophic and life discussion here as well. So yes, action is the key word for me. Act with impact and do what you can do, at least that. If you don't do what you can do, then it's lost, right? Sorry.
Wonderful. Thank you, Svetlana. I hand over to Eckhard for the last 30-second statements.
Yeah, thank you very much, and thanks for this great discussion. Sorry that we had to kind of now come already to a close. That's the hour passes always way too fast for all the content that we want to put in. I wanted to ask our two speakers to maybe give a take-home message to all of us here, but in 30 seconds. So that's kind of the challenge for you tonight to kind of find the 30-second statements that you want to give us as a good night goodie in a sense. So Svetlana, if you want to start, and then we hand it over to Tenke.
I was just giving so many messages. I should have saved them for that one. Okay, I mean, yeah, let's, I can just repeat, because it really, do what you can do. Think about it, what you can do on your personal level, or do what you can do with your job, if you can change something there, and act as entrepreneur. Or leave, or check your investment. So do what you can do and try to engage, not ignore, because there is human ignorance out there. So try to be human, yeah, because humans are great creatures and they can solve the issues. So thanks a lot.
Thank you, Svetlana. I think that's a great concluding statement. Thank you.
I would say yes, humans are great creatures, but they are also very capable of continuing to destroy the environment. And without being a very strong green or tree hugger, my takeaway message would be just to ensure that nature, biodiversity, these types of aspects are incorporated in investment decision makings or even philanthropic decision making. Not just because I think it's a significant way of generating impact, but I think it will also provide long-term protection for your charitable donation or certainly your investment. So it's also a good business sense.
May I just add one thing here? It comes to my mind, Eckhart. So remember that you are a guest on this planet. Don't mess up and try to clean it up what we messed up.
Very good. We take care of that. I think we take this into account, and certainly Geneva Microlabs is definitely there to kind of help to create this type of space for all of us to exchange on all these great ideas and great initiatives. Just before everybody takes off, here are some ways of getting in touch with us. Please do reach out to us. Please do engage with us on our different social media channels. I think it's always good to maybe follow up the discussion, kind of share your ideas with us, engage with us individually, and obviously share our YouTube channel or have a look at it. We have some great speakers, or we had some great speakers in the past, including on impact investment related topics. So I think you might want to check this one out as well. Just before you go, I want to announce the next talk will be on the 14th of April. So we will kind of skip the Easter break. We leave you all off the hook, and we will have Jan-Peter Balkenende, who was the former Prime Minister of the Netherlands, joining us here on this Impact Channel talk as well. So we would hope to have you all back and engage with us in the future. And with that, I wish you all a very safe and relaxed evening. Thank you very much for joining us. Thank you much for engaging with our speakers so actively. And I hope to see you all in this talk again very soon. So thanks and have a great evening. Goodbye.